The all-share index declined by 254.63 points, representing a loss of about 0.34% to close at 73,768.64 points. Similarly, the overall market capitalization value lost about 140 billion naira to close at 40.367 trillion naira. The market's negative performance was driven by price depreciation in large and medium capitalized stocks. However, market breadth closed positive as 40 stocks gained relative to 21 decliners. The total volume traded increased by 2.27% to 432.914 million units, valued at 12.938 billion naira and exchanged in 8,901 deals. And this is all about Nigerian stock markets. Muktar Mohammed, CEO Asheer Dynamic Solutions, joins me to help us understand this further. It's nice to have you around, Muktar.
Thank you for having me, and compliment of the season to you and all your numerous viewers.
Same to you too. Now, last week, we celebrated huge gains in the equities market, but on the first trading day of this week, the all-share index declined by 254.63 points, representing about a loss of 0.34%, and it actually closed at 73,768.64%. Similarly, as I said earlier, the overall market capitalization value lost 140 billion naira. Should we be worried?
No, don't. There's no cause for alarm. Like I jokingly said in I think it was in your program or any program, that if the market closes as it is now, investors still have cause to rejoice over what has happened all through the year. What's really happening, we are seeing shading in large cap companies, and this is not unusual in periods like this where investors or portfolio investors especially begin to revalue their equity towards next year. Some of them do a lot of sellout to have cash into entering the next year to take position in other stocks that are going to pay high dividends. And so you are seeing that playing out. So there's no cause for alarm. And if you look at some of these stocks that are being sold, these high cap stocks, you see that some of them have made over 20 to 30% gain. And so investors are looking at that. They've made so much gain in these stocks. When you look at a stock like Stanbic IBTC, investors have made up to 70, but 80% gain in that stock. So there's no cause for alarm. But again, you know, the pressure that also comes with the consumer goods sector. So that's why you see the high cap stocks, they are the ones mostly affected because consumer index per section is still very, very low. And so a lot of investors are not expecting special dividend from them. So what you see a lot of sales in those stocks, and they are moving towards other highly liquid capitalized stocks that are going to pay good dividends.
Well, the Santa Claus rally is the tendency for the stock market to increase during the Christmas season that we are in right now. And we can say that was evident last week. So, invariably, from what you are saying, can we safely say that the rally is not yet over, or should we say it is too early to call?
Well, Lekan, if a rally that started since May is coming to a close in December, I think it's one of the longest Santa Claus rallies, started earlier than expected. So if it is coming to an end, I think most investors will not panic. They say they made so much in the market. That's the only area that we've seen the policy of the current administration affected positively. That's the area where investors have been able to make money to beat inflation, even at almost 30%. So definitely the rally is not over. But maybe it might be over in some stocks, like I said, highly capitalized stock. But those rallies continues in some of the banking stocks. And again, we still think those rallies will continue again going forward. Because don't forget, the two stock investors are always the banking stocks. And from January, February, March, April, investors will be smiling to the banks from dividend from all these, especially the highly capitalized banking stock, tier one banking stock. So I think the rally is not over, but it might be over in some particular stocks. But then, like I said, the rally started since May. So it's time for the rally to take some breather, maybe.
Let's still dwell on the banking stocks. Now, the banking stocks on the exchange have maintained their positive trend. Even though they are on the local bourse, they actually shed about 139 billion naira on the first trading day of the week. So I'd like to find out from you, what are the drivers? Is there actually some things that these banks are doing differently?
Well, they've been doing things differently right from inception. They pay interim dividends. They are highly liquid stocks. They also release their results, which are audited by regulators. So all this give confidence to investors. You know what to expect from a particular set of bank in terms of dividend payment. And so definitely all these are what really drive the banking stocks. And so investors are really excited about the banking stock. You've seen they have been one of the most positive drivers of the market in 2023. Um, the minimum gain from each of those banking stocks is about 80%, which is 3 times higher than 2.5 times higher than inflation. That's what minimum. So definitely the banking stocks are liquid and they pay interim dividend, they pay final dividend. And then towards this year, towards the end of this year, they pay interim dividend, and some of them paid interim dividend of high time high, like what they've subsequently what they paid before now. They pay higher in the interim dividend, and so investors are expecting that they will pay higher in the final dividend. So it's always the toast of investors for three main reasons: liquidity, dividend payment, and regulatory authorities that normally make sure that they have meet standard and approval from them for payment. So investors are always excited when it comes to the banking stock. They've been the toast of Nigerian equity market for a very, very long time, and don't think it's going to come to an end anytime soon.
But still looking at the fact that it lost about 139 billion naira, do you think that the Central Bank of Nigeria's special investigators report, which actually alleged that the former CBN governor, that is Godwin Emefiele, used his cronies to acquire some banks, could have any negative impact, or it could have had any negative impact on the sector, with the news that the federal government might even take over those banks?
Yeah, you have to ask those banks, are they listed in the equity market? They are not listed. Union Bank was supposed to be the only one listed, but as I speak to you now, Union Bank have already applied for delisting. So and there's no any cost relating to them. And that's why you saw the trend in that space as not as negative. I mean, what you saw here, like I said, is profit taking. We are seeing a lot of investors leaving some of the low cap banking stock, going to the high cap banking stock because of the dividend payment, having made so much capital appreciation in the low cap dividend stocks of the banking sector. So I don't think there's any cost. Alan Keystone is not listed. Tetland Bank is not listed. Union Bank that was listed before is out, already applied for delisting. And so I don't see any relation with what is happening there, what happened in the market. Definitely nothing.
Well, this year was actually characterized by a bit of fluctuations. At some point in this year, there was a gain of about 140 to 150 billion naira. Then there were losses in some months. Then last week, there were gains. This week, it's about a loss. So if you are looking into the new year, is there any factor, be it fiscal or monetary, that can or may derail the positive trend that the bourse has enjoyed for a while now?
Lekan, the stock market is not a straight line. It's a curve. Perception matters, profit taking matters, fiscal policy matters, and also monetary policy matters. So sometimes what you see play out in the banking stocks or in the market this year is all about policies and investors' perception. So that's why you see those ups and downs, which is normal with the stock market. So there's no market across the world that will do a bullish trend from the 1st of January today to the 31st of December. Definitely there will be those those straight line that will come with a curve. And that always happens. If it doesn't happen, that means there's something wrong in the market. So definitely I don't think there's any cause for alarm. That's how the stock market plays. The stock market, like I always say, it's not a sprint, it's a marathon. And when you go into a marathon race, you go through a lot of challenges, but at the end of the day, you make sure that you do the right thing. And so and those investors that know what to do in every times in the market have been those ones that have really enjoyed the market this year. Now, what will be done? If, in terms of fiscal policy, the market has a life of its own, like I keep saying, but at a point, the market needs the life of the economy to sustain the kind of growth that we have seen in the market. And that's where fiscal policy comes into play. We need to get those fiscal policies, especially in the consumer goods sector, especially the companies like the cement companies, the consumers like Nestle, like PZ, like even Nigerian Brewery, all those are stocks that investors normally would have been thinking of buying in this festivity period. But you know, the challenge will come up again with the cash crunch. So that also might have a negative effect on those numbers comes at the end of the year. So a lot of investors so those who will talk about fiscal policies must be right to see growth, especially in the industrial and the consumer goods sector. In the industrial, we know that the cement companies will have a lot to play in terms of housing and also in terms of infrastructure, or that has to come with the fiscal policy, what the fiscal authority is going to do. So that will drive that sector. Now, about the monetary policy, especially for the financial sector, the monetary policy, the regulator, the CBN, have to come up with a clear-cut strategy, especially with the recapitalization that they have talked about. Are we going to see a total recapitalization? Are we going to see regional recapitalization? Are we going to see state recapitalization? Are we even going to see just recapitalization across all board? So those are what will drive the market next year. Many banks are going to come to the market to get liquidity to meet the minimum capital requirement that the CBN will be setting up. And again, would there be stability in the exchange rate? If there is stability in the exchange rate, then you could see the numbers begin to turn, that we could begin to see the foreign investors begin to come to the market. And when they come to the market, definitely the local investors are retaining high number of those portfolio now, equity especially, and so they will begin to trade to the foreign investors, and the demand and supply will come up, and you see the market go up. For me, two things will change the market next year. If the fiscal policy are able to bring up policy that will place stability in the microeconomic stage, and also if the monetary policy are able to stabilize the exchange rate to attract foreign portfolio investors. Those are the two things that will help the market next year. Will there be a big drawback for the market next year? Definitely, there will be drawback if the physical side is still lacking behind in terms of the policies, and then the monetary policy seems not to find solution to the exchange rate volatility. It comes a point whereby the market might just begin to give way to the weakness of the economy.
Three things you actually mentioned. You talked about the value of the naira. You talked about policy, and you talked about stability, and these are the things that actually affect the stock market or stock market operations, most especially in Nigeria. So I'd like to find out from you, because also this year we witnessed the listings of stocks as a result of acquisitions, mergers in some cases, and some stocks or some companies are not meeting or are staying within the confines of the rules and regulations in terms of engagement as stipulated by the NGX. So looking into these parameters and what we are to expect in the new year, what are your predictions as regards the listing and how it affects the bourse?
Well, when you talk about delisting, I think delistings have affected the market maybe negatively in some aspects, but again, not really the market. It has affected the consumer sector, and it's also affected confidence in investors coming to Nigeria. When you talk about delisting, most of them happen in the healthcare side of the Nigerian economy. Smishland and others are leaving Nigeria due to exchange rate issues, but again, some of them are not due to exchange rate issue, because even their own contingent in some part of Africa, their subsidiaries in part of Africa also have left before now. So that had a negative effect. Then we saw the delisting of Coronation Insurance also filing for delisting. Onabanjo is also there filing for delisting. Like I said, Union Bank has also filed for delisting. Those are very, very good institutions that have driven the market over time. But again, the impact, because of their impact is not as high as it used to be before. So we are not seeing those negative trend that much like most of us have expected with this delisting. This coming year, I think I'm looking forward for more IPO. I'm looking forward to more listing, and I'm looking forward for the big elephant that might come up this year before the end of this year. That's NNPC, Nigeria Limited, and also Dangote Refinery. Those are two big elephants that are going to be the key driver of the Nigerian economy for a very long time. If those two companies are coming to the market, that would be one of the best news the market has received for a very long time. That would deepen the market. That would bring more confidence to the market. For the first time, then the stock market become a barometer to measure the performance of the market, because one of the two key players in the economy will be listed. So I think next year is going to be exciting, hopefully. And remember that the current administration would have been settled down, the budget would have been passed into law, and then we'll see a lot of activity, hopefully, there won't be policy somersault, there won't be careless work either from the regulators or from the player to distort the kind of movement I think will happen in 2024.
Hmm. Also, with the CBN started recapitalization of banks, some industry watchers have shown concerns about the manner of implementation and how, if poorly implemented, could cause more issues. So I'd like to have you talk to us about your thoughts on this recapitalization issue and your suggestions and maybe their fears around it.
Yeah, Lekan, there have to be fears around it because in 2024, in 2003, we had recapitalization from 2 billion to 24 billion, and then 2 billion to 25 billion. And then I remember the then CBN governor, now governor of Anambra State, saying that no Nigerian bank will ever go down again with that capital base. Unfortunately, 5 years from there, we saw the global economic crisis came in. We saw our banks were the ones that were largely affected. Now, what happened was that we built a billion-dollar economy at that time, but we have we built a $25 billion economy, but we had a $2 billion regulator. So if you want to build a trillion-dollar economy, then your regulators must be $1 trillion regulators. And why am I saying that? When we did that in 2003, we saw a lot of banks became risks. They were not risk advanced. I mean, they just took up investment in virtually every sector of the Nigerian economy, not looking at the risks that were involved that affected them when there were crises in those areas that shareholders' funds were eroded. And this was due to the fact that the regulators did not stamp their feet down to do what they ought to do at that time, because they also did not have the manpower, the capacity to maintain an economy that is a billion-dollar economy. So my fear is if you have to build a trillion-dollar economy, then you have to build a trillion-dollar regulators. And that is where I have my fears. And that's one of the fears of a lot of people. So that by the time you have so much liquidity in these banks, if they are not well monitored, they might go the other way, like what happened in 2008, where banks were relatively investing in practically anything that does not involve them. But the other reason people will say, okay, maybe this will be different this time around is because most of the banks now have holding companies. So they might be saying with this liquidity, we might use it to expand our holding company, especially in the area of card payment. So there are fears, there are concerns. But again, when you look at what happened in terms of this recapitalization of the bank, most likely most of the sector that will really recapitalize in the banking space will be the tier 2 bank and the tier 3 bank. For the tier 1 bank, I think they will be good. But again, what we'll see going forward, we might see a lot of tier 1 banks acquiring tier 2 banks, and then a lot of tier 2 to tier 3 banks coming together to merge. So those are part of the things I expect to see in 2024, especially if the CBN go ahead with the planned recapitalization of these banks.
And so finally, even as we wrap up on this discussion, overall, how impressive has the equities market been in the year? And what were the major trends that shaped it?
Well, Lekan, how impressive? Very impressive. I just told you that they're the only sector that have beat inflation in the Nigerian economy. They are the only sector that have actually been positive since President Tinubu came to power. And when you ask me what were those key drivers that drove the market to where it is today, just two major policies drove the market to where it is today: floating of the naira, removal of subsidy. Well, so we saw those rally in the banking stock, because of the revaluation of the currency, floating of the currency, that also increased their assets and also increased their offshore fund, which they practically brought into their bottom line. They became flowed with more liquidity. So that was a policy that helped the market. Also, the removal of subsidy also saw the oil and gas sector moved upwards so much. So those two policies are the policies that have really driven the market this in 2023. And like I said, in 2024, a lot of things will happen because we'll no more have subsidy there. We'll no more have floating because those are already coming. They are already there already. So what we'll see is in 2024, we want to see what will drive the market in 2024. Like I said, it will be fiscal policy, monetary policy, especially stability in the exchange rate, and also bringing stability in the microeconomic space. And when I talk of microeconomic space, that will be the reduction in inflationary pressures, and that will help bring a lot of activities in the equity market, the fixed income space also. I expect them to be bullish because government will be doing a lot of local borrowing from this space also. So there's a lot to look forward to in 2024.
Okay.
And what has happened in 2023 was definitely two policies that drove the market. Investors have never had it so good like what happened in 2023. I can't remember when last some stocks are selling at all-time high. I mean, the last time some of them hit the level they are was 2008. And even at that 2008, they did not hit the level the way they hit it this time. And some people will say, oh, so what happened in 2008 will happen again. Definitely, this is a different time. We're not having a global economic crisis that spills to our economies. The market is driven mainly by local investors. At that time, it was driven by foreign investors. The price today, when you look at the price they are today with their PE ratio, with their earning per share, you realize that there are still many, many stocks that are still undervalued. So it's not going to be like what happened in 2008. This is going to be different. And so 2023 was one of the best years for investors. 2024 might be better, but it's happened upon three policies, like I said, stability of the exchange rate that would drive in foreign investors, foreign portfolio investors, and also reduction in terms of inflationary pressure that would
Okay.
drive investors into the market and also especially the fixed income space.
Well, a lot of optimism coming from Muktar, of course, looking at this particular issue. We hope that investors are looking at it from the angle by which you have shared your thoughts this morning, and they will be also willing and will be poised to put the investments in the Nigerian stock market. Thank you so much, Muktar Mohammed, CEO, Asheer Dynamic Solutions, for talking to us.
My pleasure for having me. Thank
And
you.
do have a fruitful new year.
You too. See you in 2024, hopefully.
Definitely. Now, the Nigerian stock market is experiencing a period of turbulence with contrasting fortunes for equity and banking sectors. While the short-term outlook for equities remains clouded, financial analysts still maintain that the sector holds promise, just as Muktar said, for investors with a longer-term perspective. But how convinced will the investors be looking into the new year with this recent setback? Well, only time will tell. We'll go on a short break. We'll be back with more.